We will discuss regarding the banking transformation, the banking system transformation in Greece and what are the trends that we will see in the future. My name is Dimitris Primpas. I'm leading IBM Consulting for Greece and Cyprus. And in this panel, I have the privilege to discuss with Ms. Sophia Bantanidis, future finance analyst at Citi, Mr. Nikos Christodoulou, who is a partner and consulting leader for Deloitte, and Ms. Christina Theofilidi, who is General Manager for Retail Banking and Executive Member of the Board of National Bank of Greece. We have seen the banking sector changing rapidly the last years. It's an inflationary environment all this year, 2022. We see regulations that are increasing. We see new players entering into the market, and also a change in the behavior of the end customers on their relation with the banks. So this creates an environment, a concept that we name the invisible bank. So this will be the main theme that we want to discuss today. Ms. Bantanidis, if you want your initial point of view.
Well, thank you so much. Kalimera, good morning. It's a real pleasure to be with you here today. And I'm Sophia Bantanidis. I work for Citi. I'm in Citi's thought leadership division called Citi Global Insights, where I work as a research analyst in the Future of Finance team. So the exam question we've been set today is the rise of the invisible bank. And I'm going to answer that by setting out 3 pillars. Pillar number 1, what do we mean by invisible banking? It can be interpreted in different ways, and we can take the discussion in all sorts of different directions. Pillar number 1. Pillar number 2, the driving forces and the enablers. And pillar number 3, really looking into a crystal ball and asking ourselves, where do we go from here? So pillar number 1, what do we mean? Well, I think invisible banking means banking that you don't see and banking that you don't think about. So let me break that down for you. Banking you don't see. I'm referring to the bricks and mortar here, the actual building. And I was really reminded by a trip I did to Las Vegas just last month to speak at a major fintech conference, where I had the pleasure of seeing David Copperfield, the magician, in his show. And he made rather large objects appear and disappear in front of my eyes. He made them invisible, including a spaceship and a big car. He just made these things vanish. And when we think about invisible banking, this is very much in contrast to how banking started. Back in the days, in temples, defined by Grecian columns, and the objects and the coins that were used to trade, and eventually paper. Now, we've moved away from those times into digital banking, and also the money that powers the financial services system today is digital. And there is a clear winner in the race between digital and physical money, and digital is the winner. And what we're talking about today, or what's talked about in financial services today, is the new era, a new type of digital money. Digital money 2.0 is what I'm referring to specifically. This could be money that's based on tokens, or money that's based on accounts, and with different legal instruments, with different levels of liabilities attached to it. Now, some of these new forms of digital money 2.0, pose really fundamental questions for the role of banks in the futures. And you have seen various banks around the world test these concepts with central banks and with regulators. Invisible banking also means what you alluded to in your introduction, the disruption of banking through big tech, fintech, and challenger banks. This started in the mid-2010s after the financial services crisis, which made banks really redirect their investments in technology towards investments in risk and compliance, and where their focus was on survival and cost optimization. And on the back of that, we saw many fintechs and challenger banks come to the market. That's banking you don't see. What about banking you don't think about? Well, this means banking that's embedded in your daily life. It surfaces in certain key moments when you need it. In certain key moments, like when you're about to pay for something and instantly you're offered a loan or a BNPL solution, or when a payout or a payment is conducted when you exit a cab ride. I was reading in a report that the average person has about 70,000 thoughts a day. Very few, if any of those, actually involve banking. I'm talking about banking as an experience. That's quite powerful because we all care about experiences, positive experiences, that is. People care about money, but they don't care about the mechanics of money, what happens in the background. That was pillar number one. Pillar number two, what are the drivers and enablers? Well, certainly technology, distributed ledger technology, tokenizations of assets on a blockchain to authenticate transactions and to demonstrate ownership history. Agile technology stacks where data can really be put to work, and we saw a lot of the challenger banks and the fintech firms use these. APIs as the interface for communication, AI and machine learning to give you insights in real time so that one can anticipate clients' needs and one can react intelligently to clients' choices very fast, and also so that one can spot risks and fraud before these things crystallize. Smartphone penetrations is another enabler. We can now run our lives, including our financial lives, on a little device. Another enabler is this terrible word I'm going to use, the Uberification of banking. I'm conscious you don't have Uber in Greece, but hopefully you know what it means. I think you have Taxi Beat here. And what I'm really referring to is people and clients' expectations. Clients expect banking to be as easy as ordering an Uber or as ordering a pizza. And the financial activity, the payout, is embedded in a very separate service, in a non-financial service. And of course, regulation and data as another enabler. PSD1, 2, open banking, allowing data to be shared with the customer's consent. So where do we go from here? And I will conclude on this. Well, there are various directions, and we have seen some incumbent banks launch their own challenger banks as a separate entity to the mothership. We have seen multiple banks form partnerships with fintech firms and invest in fintech, be that through their venture capital business, or like we do at Citi with our innovation lab, which we established in 2009. Just think about where the world was and where financial services was in 2009, in a very different place. Digital assets. These things went from theory to concept in a very short space of time, in 25 years. They will form part of financial services and markets of the future. They come with opportunities. They also come with risks. And finally, the metaverse as a virtual space that can be accessed through the internet, where we can have the 3D experience on a 2D device. It will be the new type of agora, as they had in ancient Greece, but where digital interactions will be amplified like never before. And that comes with an awful lot of opportunities and use cases, including for financial services. So the financial services levels of visibility or invisibility will be very different to how banking started. Finance is being turned on its head through technology, and watch the space. Things are about to become very interesting. Thank you.
Thank you, Ms. Bantanidis. Mr. Christodoulou, your initial point of view?
Well, I was preparing, my notes on this weekend, and I had an interesting discussion with my son, who is in the US, and he told me, have you checked chat.openai.com? Basically, I'm going to start with an example that is non-banking. And I say, no, please check it. That was released 4 or 5 days ago. And that's amazing, because it's still on beta version. But basically, you can ask questions, and you get the answer, which means they started actually, let me give you some background on that. They started actually training some algorithms. How they did it, they omitted some words in a text. And then the algorithm actually was able to find the words. And by doing so, they realized that the algorithm could understand the context of what was discussed. So I tried to play around that. And I asked specific questions. We're talking now something that was released 4 or 5 days ago. And I was, okay, I said, who is the best soccer player in the world? And with a specific, argumentation, he said he is Messi for this and that reason. Mm-hmm. Okay, I said, that's nice. Then I said, who is the best tennis player? And then I said, well, it's not definite, but they argue between Federer and Rafa Nadal. So basically, he was able to understand the question, the context, and provide the right answer. And then I say, okay, how can I bully? Then I say another class, how can I bully my wife, for example? And the answer was, it is never right to bully a person for this and that reason. So we're talking about, real, very, very correct answers. Why I'm saying that? Because this wave, actually, that comes across the world, comes across all the industries, and comes across banking as well. Very recently, so the invisible bank, basically, at least its basic steps, it is a reality. Very recently, we concluded a global research that we do in Deloitte on the digital maturity of the banking system. There we analyze 300 banks, global banks, across the world, in US, in Europe, in Australia, in Asia, for their digital maturity. And we saw a couple of trends that they're very relevant to what we discussed. It was mentioned before. The first is that the banks are becoming platforms, and in these platforms they provide banking products, but also they provide non-banking products. They provide e-commerce products. They provide automotive, real estate. They provide mobility services. So the banks have moved in what we call beyond banking. And the reason they're doing this is because the technology is so powerful that they have actually started taking all these trends of the technology. And the other interesting trend was actually that this platform cooperates in a seamless way with other platforms. And here is where we're talking about embedded finance. So there may be a loan that you get from Plesio, from Kotsovolos, and at the end of the day, when you get the loan, you're not sure which is the bank that provides you the loan. So what we see as invisible bank is coming fast, and I think it's a reality that we'll have to face all the banks in the future.
Thank you, Mr. Christodoulou. Mr. Theofilidi?
What is happening in banking in the past few years is definitely very interesting.
Yeah.
And I think it all started when banks stopped looking at one another as to who was able to offer the best customer experience and started looking indeed at platforms, at Google and Amazon and Netflix. And what we saw there was that the customer journey and the customer experience was simple and seamless. It was a one-stop shop where, as a customer, you would enter and find whatever you wanted at one place. So that's when we realized that we needed to embed, as both the speakers before me said, to embed the banking products within that process and actually make banking invisible. Because if you think about it, nobody really gets excited about banking products. Nobody wakes up in the morning and says, oh, I want to get a mortgage loan. What customers want and what their emotion is to get a house, a home. And the loan is the means in actually achieving that end. So it makes sense for banking products, for some banking products to become invisible. And that's where all banks need to form partnerships. We don't all have the size of Citi and become able to invest in fintech and research labs. So if you cannot be the best, why not partner with the best? And in our view, forming partnerships with the best in platforms, the best in digital experience, is what can benefit the customer in the end. Not all banking is invisible yet, because when you want to discuss about an investment, you usually don't trust the machine, or at least yet, but you want to find the person. Trust is a key element of that relationship. Find someone who will understand your needs, your risk profile, and offer something that's absolutely tailored to you as a customer. So banks need to drive change in terms of how invisible they become, but in my view, we also need to respect the customer's rhythm of change in terms of what they can accept. Because if you either go too fast or too slow, you may end up disappointing your customers. So become invisible, I agree, and it's definitely important in offering services the way a customer wants, but also respecting customer needs and being able to offer what you have as a bank the way the customer wants to find it and get it.
Thank you. Ms. Bantanidis, is there a role, a non-invisible role for the banks to play in the future?
Yeah, I think there is. But first of all, I just want to pick up on some of the comments, Christina, that you made. And I would agree with the remarks that have been made. And what I would add to is say that the level of invisibility needs to be fine-tuned, perhaps at levels that we've never seen before, in order to create these hyper-personalized experiences. Because, of course, not every client has the same profile or the same need. You can't compare the level of invisibility that a millennial would want versus an ultra-high net worth individual versus a corporation. So I think what's really needed, and where technology could help, is to help banks adjust and to fine-tune the level of invisibility according to client and according to product as well, really. So now to answer your question directly, is there a new, perhaps not so invisible role for banks to play? Yes, absolutely there is. And I was thinking about this as I was drafting my remarks for this panel. And I think it's very interesting when you look at where the world is going with the internet and the different generations of the internet, Web 1, Web 2, and the new generation of the internet, Web 3, where people, everybody, will be able to own and also monetize their data. So I think perhaps an interesting role for a bank of the future and a real pivot change would be for banks to act as custodians for your data. So in the same way that a bank takes care of your money and your assets today, a bank could take care and custody your data and help you get insights from your data. And if you as an individual generate data that's worth a lot, for them to also be able to advise you how you can monetize your data. And that is really the direction we are going, like I mentioned, with the next generation of the internet, with Web 3. Perhaps another interesting, not so invisible role is to focus on financial wellness and financial health of people and of customers. Particularly important when people are losing a lot of money on crypto and on crypto assets, and for a bank to advise perhaps which payment instrument to use when in the future we have all these different forms of money, and what payment instrument is the best for a client to use to protect their financial health.
Thank you. Mr. Christodoulou, you mentioned about the global study of Deloitte for the digital maturity in the banking sector. What are the results for the Greek banks? Can we consider them digitally mature?
Well, yeah, definitely yes. I mean, the results that we saw for at least for the 4 systemic banks are very good. And they show that the Greek banks have done major steps towards the digital maturity. And in fact, all 4 of them are, I would say in the first 40% of the global banks, which actually is a great achievement. There is especially one bank actually that has achieved to be in the global champions in digital maturity. That's great. So we see that the banks, through their digital presence, they provide a lot of a lot of information. You can actually onboard customers digitally. You can open an account or get a product digitally. You can do a lot of day-to-day banking, like transfers, payments, digitally. And also, they have started actually providing services, as I said before, beyond banking, in mobility, ticketing, in e-government services. So, yes, the answer is definite that the Greek banks are to this direction, and they have done significant steps. That's, I believe, very good. While on the other hand, they have achieved to maintain a strong physical presence. So I think that
it's a balanced approach. Mr. Theofilidi, how do you assess the customer's maturity to adopt this new invisible banking concept? What is your view and your experience from National Bank of Greece?
Well, as Sophia also said, it's not a one answer to this question, because each customer has their own pace at accepting this new way of banking. We see this varying around generations, but also from different types of customers. And that's why it's important to still maintain, as Nikos said, the physical network and be able to serve customers in real branches, but also be technologically advanced so that we can help drive this change. Definitely COVID helped in terms of maturing our society. The work that our government does in digitizing how we interact with the public sector also is a key driver, because it becomes our everyday reality to be digital. So I think that in terms of how we compare to other countries, as Nikos said, and as we see from the Deloitte studies, we compare well. We are at the forefront of what's happening. There are still pockets in the society that are not accustomed with this way of interacting, but it's also up to us, up to banks, to help educate our customers as well, and help them come along this digital journey.
Thank you. Ms. Bantanidis, what about Metaverse? What does this new frontier mean for the financial services?
Yeah, that's a great question, and it's one in my team that we have been spending an awful lot of time thinking about and also writing about. We published a rather large report at the end of March where we explain all of this in about just shy of 200 pages. If anybody is interested in the report, if you're on your phones, just go to your browser of your choice and type in Citi, Metaverse and Money, and you can download the report. But the best way of thinking about it is the Metaverse it's really like a new and emerging market. And for us, what it means, or for banking, it doesn't mean that banks are going to lead the development of the Metaverse, but we need to be extremely aware of what is happening, because our clients, be that really big corporations or even public sector bodies, they're starting to look at the Metaverse. They're starting to test in this space in the same way that clients used to say, oh, you know, I want to go to this new emerging market, or I want to set up office in this country. In the same way, they are thinking of expanding operations or doing something in the Metaverse. As a financial services institution, we need to be there to help them with all of their financial needs, be that for payments, be that for collections, or for something else. So really, it's to think about it as a new emerging market, and we need to be there to support them.
Thank you. Mr. Christodoulou, in this new platform economy area, in order to go to this invisible banking concept, there are significant investments made. Does these investments pay off? What's your opinion?
That's a question with a difficult answer, because, and I receive this from our clients frequently. Well, I would say that so far, not all investments have paid off. A big part of these investments have not paid off yet. But definitely, there's something that you have to be in, and you expect that you aim that in the future, this will pay off. And there are opportunities for the banks, but there are also risks for the banks. Because, as said before, the banks have a great source of data. They have the customer data. And if you can exploit that and you can monetize that, then you can actually get a lot of value out of this. At the same time, you have to be careful, because there are other organizations that have a lot of data, like, for example, telecom organization. And you see already that they're moving in this payments area, in this space, where actually, or the retailers. where actually they try to get value out of this data monetization. So in the future, it will be a very interesting case to see how this ownership of data will be involved between the banks and the other industries that they also claim customer data. So the banks have to be there to answer to your questions. They have to do these investments, but it's a challenge to see the profitability out of these investments.
Exactly. Mr. Theofilidi, continuing on the answer from Mr. Christodoulou, how do you assess all the risks, technology risks, or partnership risks that may evolve in this new area of the invisible banking concept?
Before I answer your question, if I may make a comment on what you just said, we also have to look at the opportunity cost and the cost that banks don't need to incur when they invest in digital. How much a transaction costs at the branch versus how much it costs when a customer does it digitally, and what's the bottom line result for that in a bank. So I think we should also take that into account when we measure profitability of and the return on our digital investments, especially when you talk about a legacy bank and not a fintech or a neobank that doesn't have the cost of the past infrastructure. Technology is definitely an enabler in this process. It's an enabler that requires investments. And again, it's different for a bank with a global presence versus a bank that has a limited presence in certain markets. There's always a question of prioritizing when you look at technology projects. And again, a legacy bank has to look at their old systems, invest in changing them. Sometimes these changes are cumbersome. We are in the process, in the middle of changing our core banking system, which, as you may appreciate, is a terrifying experience in some sense. So there are risks. So for me, it's important to prioritize. It's important to understand that you cannot be the best at everything. And if you're not the best, you need to partner with the best. So there's no need for a bank to try and become Amazon if you can partner with Scrooge, who is the local equivalent, the Greek equivalent of Amazon. So partnerships are definitely a way to move forward and to have a win-win end result for both partners, benefiting from where each is the best.
Thank you very much. So we will conclude with this panel. We are in front of a very big transformation and evolution of the banking system globally and in Greece. I would like to thank all the panelists. Thank you very much for your participation. Thank you.
Thank you.